Welcome to my channel. Today's video we're talking about breaker block, like I said in my last video. And the reason why I chose this as the next topic after other block is because breaker block are usually formed from other blocks. So in this video I would explain and show you how to not just find the breaker blocks but to also trade it. So stick with me. Don't forget to subscribe and like. And for your charts, you can use TradingView. For broker, you can use Exness. I'll leave the link in my description. So do well to make use of that. And if you have any questions, don't forget to put in the comment section. I'll be more than willing to answer that. So first, breaker blocks are filled other blocks. So what you have to do is, like I said, they're usually filled other blocks, which is, for instance, if you see this chart, like I told you, the other block will mark out, to get our other block position, we'll mark out this last bullish candle and then come across it. And you can clearly see that from the first sell candle to the second to the third, we have a fair value gap in the second one, which is exactly where the fair value gap should be. Now you mark it out from here to here. There's another block there, right? So what we're expecting is price retraces back into this other block and then continue the trend, which is it going downwards. But no, you can see in this case that price broke that level, which automatically makes the other block will be marking around here a filled other block. So like I was saying, the other block around here, we expected price to at least come back in here, test it, and then continue downwards, right? But no, in this case it broke that point, which makes this point a filled other block. And if other block, once the other block is a filled one, automatically becomes a breaker block. And now this is the block that broke it, which is more like the engulfing candle. But in breaker block, if we're talking about the concept breaker block and we have an engulfing candle, it's referred to as a displacement candle, because that's a candle that messed up the other block at that point. If you get what I mean. Of course you do. So now the other block is here, is filled because there was a displacement candle, which automatically made that whole happening a breaker block. And now we can clearly see price got here and then he reversed back. So breaker block are usually points where we can also use just like other blocks, but in this case it usually shifts the market structure. Okay, because now you're expecting price to get to this other block and then retrace back and continue downwards, but in this case it went up, causing a market structure shift. So it just changed the trend automatically. So those are the cases that, so as you can clearly see, this serves as a market structure shift. Is the same like the other block, but the difference is the other block, once it gets tapped into, price goes, it just continues the trend. But an other block, once it breaks past, a breaker block, once it breaks past the other block, it's usually a market structure shift, change of trend. You already know there's a different trend now. Now, this is how you trade it. When you have another block, which is at this point filled, and price breaks past it, it always reverse back into it as an entry level to continue in the new trend that the failed other block made. The market structure shift, whatever direction it made it to, price has to reverse back to that other block that failed before it continues. Do you understand? And that's what we can clearly see. So in this case, the other block is here, it's failed, price break past it, there's a displacement candle, of course there has to be, and then it reverses back into it. Now if you're going to have a stop loss, your stop loss usually should not be more than this rectangle. or maybe a little bit below it, which is why you need to go down to lower time frames to be able to spot that point. You need to get the exact order block on a lower time frame and spot that last. In this case, you need to go down and spot that last bullish candle. Do you understand? But if it is in a reverse case, you also have to do the same. So there's nothing hard about it. The only thing is you have to be calm about it. Find the failed order block first. Check it out. Price broke past it. Reverse it back into it. Boom. That's it. That's it. That's all. There's not so much to it. So I told you in trading, you have to keep it as simple as possible, because keeping it simple is actually where the game is at. All this plenty contradictions and this and that, too much information. Just keep it as simple as you can. Know the basics. Know everything that needs to be learned, but keep it as simple as you can. Which is exactly what I did here. So now this failed. I taps back into it, and then boom. So usually you should not target, you can target this point or a little bit above it, but regardless, that's your target. So we can see here, we have another example here. Continuing upward, that's just usually what it's going to be. We have another at that point. This is the displacement candle. You can see, I told you the engulfing candle in the breaking block is called a displacement candle. So we have a displacement, price cash back because of this, not this. This is why price came back. There's a little tiny bitty candle there. For me, I'd like to call it resistance, but let's still stay in the other block here. So we can clearly see this resistance here. Let's call it that. That's the reason price tapped back into it, which is on a lower time frame. There's another block there, and it failed too. And the displacement happened for this and this point. But this cutback was because of this. Because it's smaller. So on a lower time frame, that's a very big move. On a higher time frame, this is a daily time frame. It's a very little move. So you can see all the way price had to go to come back into it, and it tested it twice. So that's just really it. There's not so much to it. You can also use this in the reverse case. Just look for it. In this case, we found a bearish order block. Then since the bearish order block, then the displacement, then another one, and so on. But in the reverse case, you need to look for a bullish order block, the one beneath. Price is supposed to come back to test it, and then it breaks past it, and then it reverses back to it, which is the support level, and then automatically it just becomes a bearish trend. So it's that simple, and you should always learn to keep it that simple. There's not so much to it. Yeah, thanks for watching. Stay tuned. On the next video, I'll be talking more on concepts in Forex that you should really get to know and help you understand them better. So, like I said, if you have questions, drop in the comment section. I'm more than glad to help you with that. And yeah, that's pretty it. Have a nice day, and don't forget to subscribe.